Hey there, and welcome to the Momentum Options Trading course. I am Eric Jellerson, the creator of the Momentum Options Trading System and the founder of Momentum Options. So this course is going to be a complete guide to navigating the market profitably. In this video, we're going to talk about our outline, everything we're going to be covering throughout this course, so that if you ever need to figure out where to refer to, you can always come to this table of contents to find the section that's most useful to you at that time. So let's go ahead and get into it. Like I said, this is our outline for the course, and we're going to start off by getting to know the market, understanding our methodology. So we're going to talk about what the stock market is, who are the market makers, what are stock and market fundamentals, so that you know how to choose or how news, how data will affect the value of the company or the market you're looking at. Then we're going to get into our exact methodology. Why do we trade? When do we trade? And then we'll get a little bit into options basics, just so that you understand a little bit what options are, how they work as we go throughout the course. But we'll get deeper into that later. Then before we go ahead and get into the nitty gritty of things, the meat of it, we're going to make sure that you're all set up in Thinkorswim, that you understand the features. We're going to get your dashboard set up. We're going to set up your chart area, and I'm going to show you how to set up a flexible grid area so that you can maybe use multiple screens or just simply look at multiple charts at once. From there, we're going to get into our technical analysis. We're going to start looking at candles. We're going to talk about volume. We're going to talk about static and dynamic trends, drawing trend lines. We're going to figure out how to draw and identify key levels of support and resistance. Then we'll look at patterns, and I'm going to give you guys some homework to go through. You can turn back into me to make sure that you're viewing everything right. You're being able to read the candles, identify support and resistance, and identify the most relevant trends to you. Then we get into the more intermediate technical analysis, where we start talking about dynamic trends like exponential moving average, using exponential moving averages and simple moving averages. These two different types of moving averages tell us a lot of information. They give us a lot of information. They can tell us a whole lot of things, but they are absolutely different. We use them completely different, and we don't use them on the same time frames and in the same way at all. So we'll talk about that more in that section. And then from there, we start building on the studies and indicators used in the momentum options trading strategy, starting with our momentum and trend indicators like MACD, T-Team Squeeze, DMI. Then we get into our oscillators. We talk about RSI, MFI, and most importantly, being able to recognize bullish and bearish divergence so that you can identify when a stock is likely to keep going in a certain direction or maybe reverse. Then we get into our volatility indicators. Specifically, we'll start talking about the VIX, the volatility index. We'll talk about options, implied volatility, and then we'll take a look at Bollinger Bands and how we can see volatility expanding and as trends get going, and how we can see the trends ending as price gets too far outside of our bands within a certain trend. Maybe we're in an uptrend, price falls drastically outside of bands. We might spot a reversal, especially if we're using RSI and MFI in combination. So we'll get way more into that later. Then we get into our multi-timeframe analysis so that we can understand the overall trend momentum so that we can identify the best trades. We'll talk about forecasting, how to use multi-timeframe analysis to predict where prices are getting ready to go, maybe in the next day, maybe in the next week, months, or even years. Then we'll actually break it down more specifically to identify trades for our swing trades using multi-timeframe analysis. We need to know what exact time frames we should be looking at to stack the odds in our favor. And the same goes with day trading. We need to know all the most relevant time frames to identify profitable day trades that are likely to continue in our direction. So in this section, we're going to really break it down, what's going to be most relevant to the way you are trading, whether you're day trading, swing trading, or investing. Then we get into the more advanced technical analysis, and this is really where we kind of bring everything together. But we talk about Fibonacci analysis and the golden ratio, and how we use Fibonacci analysis to make our trading plan for swing trades and for our day trades using our orb method. So a lot to cover in that section. And not last, excuse me, but then we're going to get into market internals. This is kind of the last of our technical side of things. Market internals are a really powerful indicator of market sentiment. They let us know what the market, what kind of market we're stepping into each day, whether the market is likely to continue higher, whether it's likely to continue lower, or maybe it's likely to open and close in about the same spot and just be a choppy day. Using these technical charts, we're actually able to tell that pretty early inside the day. I would say by 10 o'clock, after the first 30-minute candle closes after market open each day, we have a pretty strong understanding where the market is likely to trend, higher, lower, or maybe nowhere at all and just sideways. Knowing that ahead of time is really, really valuable. It allows you to set the right type of expectations for the trading day you're stepping into, so you know to look for the right kind of trades. Or maybe you just know to sit on your hands and wait for the choppy market to subside and things to become more obvious again so that the great trades come back. Profitable trading isn't about constantly trading, but about letting the best trades come to you. So that's what everything that I'm going to teach you. We're going to perform all this analysis so that we know how to find where the best trades are going to be so that we can wait for them to come to us. When it's time to enter, we can take profit at our targets as they hit and close the trade once it stops working. Because if a trade isn't making you money, then why do you want to be in? Then we got to get into risk management. Like I said, if a trade isn't making you money, then why do you want to be in? And risk management is really where we kind of bring all these kind of concepts together. We talk about position sizing and how to effectively scale the growth in your account. Because as you make money in your account, your account's going to grow. So your position sizes should reflect that. You should be growing your account, growing your position sizes, but all at a safe rate, all without risking more than your account can handle. Just because your account's grown doesn't mean you need to double your position size, but maybe you add, slightly more, one more contract to your trade on each trade because your account's grown, right? Then we're going to talk about how to build an effective watch list and how to choose the right options for swing trading, my best practices, how to choose the right options for day trading, my best practices, and we'll talk about the momentum options trading system and how it really shows you all of these things. It performs all the technical analysis, multi-timeframe analysis, Fibonacci analysis. It analyzes all of our EMAs, our oscillators, our indicators, and everything in order to only signal high probability trades that are actually likely to continue in our direction. So we'll talk more about that there. Then we get into our advanced option strategies. So for swing trading, for example, I really like vertical spreads. They really slow things down, make it a lot more calm, easier to manage. Time isn't your enemy. So we'll talk about that and how to apply those for our swing trades. And then we'll also talk about things like debit butterflies, which are really great for choppy days. It's a very low risk, high reward trade for markets that are likely to not go anywhere. So if we don't expect any continuations, if you're not expecting to get in on a big move that day, markets aren't really looking like they're going to move. Maybe you have nothing on your scanners. When you're getting choppy signals from market internals. Maybe you want to put on a debit butterfly for very low risk, high reward. Or perhaps it is a choppy day, and you still find a continuation trade you want to get in on. You want to get in because you think this stock is going to rally. A debit butterfly on the market on that kind of day can be an excellent hedge to that trade. So then we'll talk about cash secured puts. So this is kind of a good way to get your foot in the door for investing into a stock that's falling or perhaps has fallen, but you don't want to risk buying the falling knife. Cash secured puts are an excellent way to get your foot in the door, to collect some income. And if you do it right, they have a very, very, very high probability of success. And if you do own shares, maybe you do get assigned, you did want to own a stock, and perhaps it's performing really well for you or has performed really well for you. You still want to hold on to it. You don't want to take your profit and just sell your position because it's an asset maybe you want to hold for the next 10 years. but you also recognize that it's up in value. It's time to find a way to collect some profit from it, but you, again, don't want to be out. Covered calls is an excellent way to do this. And again, if you know how to do it right, the odds of getting assigned are actually relatively, well, very low if you know what you're doing. And the odds of you collecting that income on the investment that you wanted to make you money in is again, very, very high. So a lot to cover in the course. We're really going to break it down and make sure that you understand everything. I hope by the end of this course that you truly feel like you're becoming a master of the market and that you know everything you're going to need to know to find the success you're after. Because if you follow what I teach in this course, you will have those skills. It's just up to you to practice, to hone the knowledge, and to apply it, really. So I'll make sure that I do my best to explain everything and make sure it all seems like a very simple step-by-step process, because that's what trading should be. You shouldn't constantly be guessing or wondering where a price is going to go next, or constantly having that fear of you're missing the trade or trying to get revenge. So many people fall into these types of traps. Trading can be very psychological, but it really should be a calm process. This is a job like any other. You should show up. It should be relatively boring. You're just waiting for the opportunities to show up. When they show up, you place a trade and you sit back and you wait some more until it plays out. But it's all very calm and predictable. That's one of the biggest mistakes most new traders make, or even experienced traders who get caught up in FOMO and all the excitement. Trading should really be a calm endeavor. Each and every day shouldn't feel like a wild roller coaster if you don't know what's going to happen, because it is very predictable. It is very organized. That's why Wall Street does so well, because they have come up with their own set of rules that makes it very organized and predictable, and hedges all the options. It really makes things calm. So hopefully by the end of this course, you're feeling very calm about the market. You're able to easily, calmly regularly identify profitable trades. You'll know how to get in on them. You'll know how and where to take profit on them, and you'll know when to close your trades so that you lock in those gains and you don't have unnecessary risk to your capital. Because once again, trading is about risking your money, and you should only risk your money when the odds of success are high, the chances of making money are high, and the risk is significantly less than the potential reward you expect to receive. Okay, so we got a lot to cover. I will see you all in that first section where we're going to talk about the market and the momentum options methodology. So I'll see you in there.